We are back in action. Good morning, everybody. Oh, man. Good to be back. Long weekend. Hope you're refreshed. I'm refreshed. We missed you. Hope you all had a great Christmas. And we're back in what is typically the quietest week of the year. That's okay. We still have a show and we still have charts. So, JC is here. Strazza is here. You're here. I'm here. Alfonso is here. Ryan Dietrich will be here in about a half hour. Very excited for that. So let's roll.
All right. Merry Christmas, everybody. Welcome back. Where the hell are you, Strazza?
I am in Stuart, Florida.
Where in God's green earth is Stuart, Florida?
It's not far from where you grew up.
Really?
Hour and a half or so from Miami.
See, growing up in Miami, we never went north. We'd always go south.
Right.
So like all these places that you guys talk about, like Boca and Del Rey, like I don't even know where these places are.
I was hanging with my cousins from Boca the other day. Really nice. Yeah, we rented an Airbnb here, like 5 minutes from my parents' place.
It's funny because I feel like, I have friends from all over the country, obviously, and they are familiar with their surrounding areas, like they know, like, oh yeah, that's half an hour from me. It's very nice, or it's terrible,
You have no idea.
I have no idea.
He knows
West Palm. I've never been to any of these places.
He knows his way around Miami, and that's about it.
We never went north. Like we'd go south or west. We'd go out to the West Coast, go to like Naples. I lived in Fort Myers for a summer,
Oh, did you?
I was training with the Minnesota Twins, single A organization.
Wow.
Back in '99.
Wow.
It was quite the experience. They were paying these guys like $15 a day or something. It was ridiculous. You got all these like Dominican guys like just trying to like make it, and there's like zero chance they're gonna make it,
You did that before or after school?
I did it in between junior and senior year of high school because my pitching coach was the pitching coach for the Twins rookie ball. So he just brought me and a couple other guys along for the summer, which was sick.
That's
fun.
fun.
We were training with the team. We'd eat with the team,
So how was Christmas at your house?
Let me tell you something.
Tell me.
I'm like a freaking carpenter. The amount of shit that I've been building over the last couple of days is ridiculous, dude. Just building all kinds of stuff. And they don't even show you a picture of what it's supposed to look like when you're done, right? Or like there's no name that you could search and be like, what is this thing supposed to look like? You're just supposed to guess. So, I mean, let me tell you something. I was always pretty good at like Legos and stuff when I was a kid. I am the man when it comes. I got the tools. Dude, I'm hooked up with the tools. I'm actually using them now. Like, it's crazy. It's wild.
I don't think you need tools for Legos, but do you?
No. It's not even, I'm not building Legos, but it's like you follow like instructions like Legos, but you need tools. Zzz, zzz.
Yeah, JC, what pisses me off is when the instructions, when there's no written instructions, it's just a picture.
It's just a picture. That's right. Well, the written instructions are in different languages.
Interpret the picture, but there's no words.
Dude, it's ridiculous, dude. Yeah. And the amount of things that I still need to build, it just it adds stress to my life that I have to build. What do I have to build? I have to build like a train table. I guess it's like a table that you put trains on, I guess.
Mm-hmm.
I got to build, what else do I got to build? There's like 3 boxes. I don't even know what's in it.
The kids were happy with Santa.
That's all that matters. The boys are only 1, so they don't know what the hell's going on. But the 3-year-old gets it, and she's stoked, and she had a great day, and that's all that matters, right?
Hell yeah,
dude! I had like 200 cannolis. I'm pretty sure.
It was nice. It was relaxing, like JC said. A bit too much on the dessert, probably yesterday. Yeah. But it was awesome having football on Christmas. I mean, we woke up, we watched the Knicks, and we had the Giants. So some
Knicks won, huh? How about the Knicks?
Knicks played great. Did you see like the Heat Christmas record, like 8 or 9 straight, something?
For the Spoelstra.
On Christmas. Wow. Yeah. All good sports on.
Dolphins beat the Cowboys. I feel like the whole country was rooting for Miami there.
They were. Great game. Great game.
That game
Big
was
game next week. Dolphins, Ravens, man. That's going to be a hell on New Year's Eve.
So basically, winner takes first seed and gets the bye.
Not necessarily, because if Miami beats Baltimore, then Miami still needs to beat Buffalo. Miami's got to win the next 2 games.
Wow.
I know. Can we talk about the market? Because, for a slow week, as Spencer calls it, meanwhile, it's maybe, it's one of the most bullish weeks of the entire year. That's slow for you if you're not entertained. But shitcoins mooning over the weekends? Come on.
No one asked about my Christmas, but it was fine. Thanks, everyone.
How was the movies? How was your Chinese food?
Coins. It was great. Thanks for asking.
So was this
hold on? Was Spencer's shitcoins mooning over the weekends?
Solana's the biggest shitcoin that I own. So
you got the right one, apparently.
Got the right one. All right.
Good job, Spencer.
So would we call this a crypto Christmas, or was it just like kind of like a Solana Sunday?
Ooh, I like both. I love good alliteration.
Ooh.
I like both of those. I'll give you both.
Okay.
I'll give you both. Solana Sunday, but it was like a Solana Saturday. In fact, also.
How much of this kind of holiday price action, which is nothing new for the crypto asset class, simply has to do with literally people getting together with their families and there being a massive inflow from retail?
Zero.
You don't think that's it? It can't be just that? Because they'd
be buying Bitcoin. They wouldn't be buying Solana. They wouldn't be buying Injective Protocol.
I don't know, you got a crazy uncle and you're like, yo, these things are going 10x. And he just takes out his phone and just buys a ton, and everybody's doing that everywhere. And then you get a crypto Christmas.
Nah, if it was just BTC, but when you got things like RNDR mooning, Solana mooning, Injective Protocol, these are not your drunk uncle's trades, that's just, I don't buy that. So my answer is no. I think it's a lack of exposure. You're seeing, you saw the relative strength in Solana. So anybody who studied relative strength in traditional assets shouldn't be surprised that the leaders were already showing relative strength in crypto assets. Is there any difference?
Do you think it's time to get cute and play catch up?
Throw slide 2. Throw slide 2 there. I
have a good question about how to play the cryptos. Yeah, look at this thing. It's already halfway back there.
This thing was at 10 from 200, and now we're back in the 120s.
Here's what I think about. If you bought the worst stocks since October, you've probably done better than if you bought the leaders.
October of what year?
This year, not last year.
Yes.
And that happens, right? There are periods of time where the laggers catch that rotation, they play that catch up. You get these, swift counter trend moves, and those trades can really return a lot. Is it smart to employ the same strategy for crypto and buy some of the weaker ones, right? Or the relative laggards? And is it time now?
Like what? What would you consider a relative laggard? Let's show the opposite. Hold on. Let's show the opposite of what a relative laggard means. Here's Solana on an absolute basis, price in dollars. Now look up the Sol BTC. Go to the Sol BTC. So this is Solana Bitcoin, right? Mooning. And then this is the most bullish one. Go to the Solana ETH.
Yeah.
Look at that. Wow.
And these last two that you're showing are more important than the absolute trend, right? This is what we use to identify Solana as one that we thought would be a crypto sector leader this cycle. We weren't looking at the absolute trend to figure that out. We were looking at the relative trend all year, right? And that's why we turned bullish on Solana as early as we did, as well as some others. But do we keep doing that and going back to the well and buying the strongest ones? Or at what time, look no further than ETH, right? If you want an example of a laggard that I'm talking about. ETH BTC, right around those lows, does not look good, has not been outperforming on an absolute basis. You have a very clean level where you could define your risk, or do you just stick with the winners, right? Like, do you take
you want a confession here? It's not a confession because I don't give a shit. You want to know what I'm thinking here? And I was thinking about it last week.
Mm-hmm.
I like the ETH BTC because on the recent lows that we just made, and we did just make new recent lows last week, new 52-week lows, look at RSI. Momentum getting nowhere near oversold levels at all. Man, look at Fonzo. Look at that. That was quick. I like it. New 52-week lows for ETH, BTC, and look at that momentum, man. I think if you're shorting this, I think you got a death wish. I think there's a squeeze coming. I think ETH. I think it's maybe an ETH New Year's. You know,
I bought some ETH this weekend. I added some Atom, and you remember the Decentraland?
Naturally.
These gaming ones, whether it's, you see Axie Infinity this weekend going nuts, the Sandbox. We have grouped these cryptos into industry groups, right? And what you'll tend to see is that just like subsectors in the stock market, they all go together. Oh, semiconductors are having a good week. No, solar energy stocks are bouncing back, right? In crypto markets, it's, oh, look at the DeFi coins, right? Or look at the exchanges. They're really going. It's these gaming ones, the metaverse ones. So Sandstorm, Axie Infinity, Mana. So I added some Mana. But I think it's time, JC, to sprinkle some love into some of the ones that maybe could play catch up here. I really do.
How about today's the first day of the week, and we coming in hot talking shit coins? What kind of market is this? Think about it, right?
It's really good.
You say it all the time. Be aware of your behavior. We don't always come in hot on it's not a Monday, it's a Tuesday, but for all intents and purposes, a Monday, first day of the week, and we're coming in hot talking about cryptos mooning over the weekend, and I've had people all year talking to me how this is, we joke about how it's funny money, but Solana just crossed the $50 billion market cap mark over the weekend. So, it's not real money. It's all fake. It's all Ponzi schemes. Yeah, maybe. So what? Who cares? Does that mean we have to give the profits back because you think it's a Ponzi scheme? Maybe it is. I hope it is, right? These scams can last a long time, right? Let it go to zero after we take profits, right? Whoever is left holding the bag, that's not our problem.
For all those people, I promise you, it's real money. It counts.
It counts.
Promise.
That's right.
But I think the more important point is, right, because this was a nice holiday weekend. We're all getting together with our family, and questions are being asked, right? And I think the biggest...
Are they?
Yeah, I think so.
Your family's asking?
Oh, dude, I had a great conversation with my cousin.
Well, you're a junkie because your family was a junkie before you.
He was telling me it's the Hedera.
Who's he? Your father?
My cousin from Boca.
Got it.
He's really into the cryptos. He was talking all the fundamentals about HBAR. It's fun. You get to hear this stuff.
Okay, fine. But your cousin is actually a junkie. It's not like some rando that he's he's a true degen.
He's got helium miners. He's just like us.
Got it. So that doesn't count.
Fine. Here's the point. If you are having these
when your mom's asking you about the the ETH BTC ratio, then you're right.
Or for example, like I'm talking to my father and he knows like how well the good ones have done. And he's like, oh, it's too late. It's too late now. No, I think the most important, thing to point out is that this is brand new uptrend, really, really early inning stuff. Like, sure, the best ones, Solana's up 10x. You're not going to find many others that are up 10x, right?
Do you think this is a function, an extension of the bull market that we have in equities, or you think this is independent of all of that?
Oh, it has everything to do with that, right? These are your ARK stocks, your long duration growth stocks, just like ARK's completing a base in the stock market. You're seeing all these bases and reversal patterns print in the crypto space at the same time. I think that makes a lot of sense. We saw it last cycle too. We saw them peak together in 2021, right? The speculative equities and the cryptos. So 100%, that's what's going on.
The low for crypto in 2022 was in June. Mid-June of last year was the low for Ethereum. And that is when the new 52-week lows list peaked on the New York Stock Exchange, June of 2022.
Also,
and then what you saw is the S&P 500 finally put in its final bottom in October of 2022. But by the time the S&P put in its final low, There weren't any stocks left making new lows. Bitcoin and the NASDAQ made lower lows into November, but there weren't any stocks left making new lows. Ethereum had already bottomed. The new 52-week lows list had already peaked in the summer. All of that happened at the same time. So if you're looking for evidence as to whether what we're seeing in crypto is an extension of the risk appetite that we're seeing for equities, look no further than than essentially the June to December period last year when all these things bottomed. The cryptos were bottoming at the same time as the equities market.
Another thing worth pointing out, you're absolutely right. The breadth was there at the lows, but another thing that was there that nobody's really talking about today, because we're a year removed now. I was doing a podcast with our friend Jason Purrs. Shout out. It's called Against All Odds on YouTube now. Love Jason, what he's doing over there. We were talking about how it's not uncommon at all for crises to accompany bottoms, right? So what did we have in last November? You're talking about how the internals of the market bottomed in the summer. Well, the ultimate low for Bitcoin this cycle was November of last year, literally like a week or two after FTX blew up. And you didn't see sentiment this bad for crypto. I don't think ever. You had some really, really smart people saying it's dead. It's gone. Crypto's over, right? On the FTX blow up. That was the bottom. When you see sentiment completely wash out like that, right? And in this case, the stock chart or the price chart of Bitcoin, it wasn't collapsing to zero. It was bottoming, right? As that sentiment was completely blowing out. I mean, that is what bottoms are made of, that kind of bearish sentiment. And it was there. And I think we had a similar situation with the regional banks this year and the banks, right? Just like complete sentiment washout. Then you look back a quarter or 2 quarters and you're like, wow, what a beautiful base. Buy those every time. I mean,
remember how adorable it was when a couple of banks that no one's ever heard of disappeared? Remember? That was hilarious.
People were scared. It's more about that, right? It's more about the action than the action.
Scared.
Right. And I mean, JC, why don't you speak to the nature of the sentiment last year for crypto? Have you ever seen it that bad? I mean, it was awful.
Should we bring back the magazine covers? Do we need to do that?
Can you blame people?
I think it's a really important lesson, and it's worth revisiting now that we're a year, 13 months removed. That was it. When nobody wanted it was the absolute best time to be buying it, right? And that's not an uncommon thing. So I think it's important to go back, and study these periods because a lot of opportunities.
So I have a question. So we've been talking about going down the crypto cap scale, right? Into Solana and shit coins, meme coins, whatever. But in the meantime, it's not as if Bitcoin and Ethereum, are going down. They're not really going up, but they're not going down either. So how do you think about those two as the buying activity, whatever you want to call it, spreads further down the cap scale?
It's always the toughest question in terms of navigating and participating in the bull market, right? Do I buy the best ones and do the right thing? Or do I get a little risky here, buy the worst ones, hope for like a higher beta trade, right? Nicer risk reward, whatever it might be. I think the answer is always to do a little bit of both, right? Own the leaders. Don't get rid of your Solana to buy one of these laggards, right? That have not been outperforming Bitcoin. Definitely don't do that. But I don't think there's anything wrong with dabbling a little bit. Frankly, though, Ethereum's driving me crazy. It hasn't been working. The rest of these things are doing really, really well, and Ethereum's just sitting there. JC, this is exactly what I was talking about.
Well, okay.
Remember?
In fairness to the middle one is clearly referring to FTX. The other
two, the point. It's not the point.
They were everything. They were. Do you not remember?
The fact that they can get this creative with the thing, with the hair, with the Fat Fred Savage, the whole thing, and then the crypto downfall with the rockets going in, like searching for returns, and you got this poor gold miner getting screwed, not finding any gold. Like, this is just like, come on.
FTX,
when the journalists have this much time to be creative.
Yeah.
What are you talking about? There are people whose job it is to design this cover.
Right. But by the time the journalists figure out that crypto has been falling, and then they write their stupid article, and then they submit the ideas for the cover art, and then the cover art gets done, and then it gets approved. By the time it actually gets published, it's too late, bro. Buy their pain.
Yeah, and there's a point here from Sam. Wasn't FTX preceded by 3 Arrows and other crypto? There's always going to be crypto blowups. Those didn't even make it mainstream. They weren't.
Right. We know about that, but that's Strazza's right. That wasn't even mainstream. Hold on. Can we talk about current sentiment in can we just move on from the funny money for right now?
Yeah, I think we spent enough time on this.
By the way, JC, starting next year, your business week is going to be an even more of a lagging indicator because it's going from weekly to monthly. So it's only going to be 12 magazines a year.
And they pulled this thing before and brought it back.
We should do like raise money, like a GoFundMe account to keep journalists employed so that we can keep the data, you know?
Yeah.
Like keep journalists employed. I'm all for it. Like the First Amendment and all that, like that's cool, but I'm more interested in the sentiment data between you and me. Okay, quickly. So we got Dow futures up 26 points. New all-time highs for the Dow Jones Industrial Average. Kind of a big deal. S&P 500 up 5 handles. NASDAQ 100 up 20 points, which is about 10 basis points. Bond futures up again as stocks and bonds continue to trade together. Gold flat, silver flat, copper up 40 bips. Crude oil up 2% today. And the dollar pretty much mixed. I will say on the dollar front, continuing to get some strength out of those emerging market currencies. Mexican peso, Polish zloty, of course. Brazilian real looks great. The strength that we're seeing in emerging market currencies continues to suggest weaker dollar, which to me suggests higher stock prices. And of course, in the old funny money, Bitcoin down 850 points actually, down to 42,700, which is about 2%. Ethereum down 1%, down to 2250. Solana down 4%, all the way down to 115, and that is your futures rundown. But I do want to talk about sentiment. Can we talk about how consensus, slide 9 there, Spencer? Sell side consensus, pretty pessimistic. 2.2% upside for the S&P 500 is the consensus for next year, compared to a historic 9% for the S&P 500 on an annualized basis. This is after they came into the year consensus that the stock market, that the S&P 500 was actually going to fall in 2023. It actually did the opposite. It was one of the greatest years in the history of the United States stock market. And they came into the year, first time this century that Wall Street sell-side consensus was that the S&P 500 was going to return negative returns for 2023. Actually, it was a great year. Again, super pessimistic. Why do you think Wall Street is trying to scare investors so much? What do you think, Spencer?
Well, there's a very easy explanation for this, right? I wasn't wrong. I was just a year early, and like it's easy to fool some people with that argument because don't worry, it'll be next year, right? I know the recession we all, that was consensus. Yeah, don't worry, we were just a year early. It'll be next year. What becomes harder is 12 months from now. If it still doesn't happen and you're wrong for a second year in a row, then you have no more legs to stand on. But for these people, you can just say, oh, yeah, actually, our bad. We still maintain our thesis, recession, slow growth, but just next year, not this year. Just push it out a year. It's easy to do it once. It's hard to do it twice.
This is another group that we need to make sure they stay employed. These sell-side analysts, like I can't imagine they get paid any money, but... And I'm sure they're getting paid less and less every year.
What jumps out to me on this is you look at like the actual like research firms like Yardeni and Fundstrat and Ned Davis, all in the top half of this, and the big Wall Street banks, all occupy the bottom half, which is interesting. So JP Morgan, Morgan Stanley, Wells Fargo, I guess Bank of America and Goldman Sachs and Citi are up there towards the top, but
do you imagine being like a Morgan Stanley financial advisor and being like, oh, open an account with us, we have the best research, and then the research tells you to stay out of the stock market in a record year, and then it's like who do you blame? Do you blame the analyst? Do you blame the financial advisor? Do you blame the clients for having an account there in the first place? Like, how does that work?
that's what it is though. Like that's the job, right? Is
What
like,
is?
like if you're an advisor, you have to point to your in-house research.
Ugh,
That's what it is. That's what you do. Like
sounds like a terrible way to go through life.
not JC. Most 99.9% of people don't know like that like if you showed them this chart, they wouldn't even know like what, you know what I mean, like what it means or how to interpret it. Probably most people have no context. If you want to pick on any one bank, and you
I
want to
know,
pick
but
on
why
one,
is that our problem?
Fair.
Why is that our problem?
it's
I don't
not.
think it's fair or true. I don't think people give two shits about the sell side. Even retail folks, they're not fooled. I think the secret is out.
I know, but it's good data still, man. These guys being super bearish coming into the year was great data. Remember? You were there. We
So
were
what does that
talking
mean?
about it.
So what does that mean for this year, where we have some lofty estimates, some outlier bullish estimates, and then for the
very
most part,
lofty ones.
it looks like a pretty. What's the median estimate? Like 12% this year or something, right?
Median estimate for what?
Year-end price targets.
2.2%.
It's that low.
Median is 4875. S&P right now is at 4800.
We're at
So median
Nice.
sorry. 4875. Yeah, that's right.
Yeah,
So do the math. What is that? 2%?
I think we could go for a good 2% consolidation year. That would be constructive.
Dude, you're going to bet that Wall Street sell side is going to get it right, or are you going to take the other side? Come on.
Well, wait though. Hold on though.
Zero chance that these fools get this right. No shot.
But what? Hold on. I'm asking as a non-technician here, but what typically happens after huge rallies?
You get more huge rallies.
But also, okay, or you can also get consolidation.
No, that's not true. We've done
You know
the
what?
work.
You know what you'll probably get this year, now that everybody's over it?
What?
A recession.
Oh my God. Recession. Get out of here. I hope we do get a recession. Stocks do great when these idiots announce that there's a recession. Remember? Like by the time they announce that we're in a recession, stocks are already on their way up. So I hope they do announce it, right?
I think you might get a nice little mild recession.
I would love nothing more. Hope real estate gets destroyed so I can get a nice cheap beach house. You know what I mean? I'm all for it. I don't see it.
Real estate staying strong. Really impressive.
It is.
Really impressive.
It is.
Also, just on that front, on the economy front, we talked about these holiday sales. I think some of the credit card services firms are coming out with some early numbers. Another monster holiday season, right? The consumer is just killing it out here. And I'm really
slide 16. Slide 16. Go ahead, Strazza. Sorry. Go to slide 16 while he's saying this.
I want to see these updated buy now, pay later numbers, because that's a really, really interesting trend that's going on. And Spencer, I saw it. I saw it in the grocery store. Saw it at the Walmart.
Oh yeah?
Yeah.
Wow.
50% year for the NASDAQ, 30% for the S&P 500, and we still got consumer sentiment down in the dumps.
Yeah, it's incredible. It's incredible. It's a nice setup. It's a really nice setup. You know.
What about the thesis that this chart is flawed because of the polarization of the political arena or whatever?
Well, we should probably talk about that too. With the new year right around the corner, 2024 is going to be absolutely crazy with the politics. Ignore it all. It won't help you. I promise.
Did they just go around the country and find the two oldest white guys they could find and then put them up against each other? Is that like the strategy here?
What is coming is going to be insane.
They can't find somebody who like grew up watching MTV. Like we have to find like the two oldest guys like on the planet. Like one of them, the guy in the White House now is like Weekend at Bernie's. Like they're just like carrying him around, you know what I mean? And then you got the other one. I mean, can we not find somebody younger? I just don't understand. I don't understand.
What's the minimum age you need to be president? Like 45?
35.
Oh, is it that young? 35? Oh,
35.
Wow.
Because, you know, they would die a lot earlier when they made that law back in the day.
True. That's young. Wow.
Did you guys see the Kevin Spacey thing?
Well, I didn't.
Is that his real accent? Is that how he talks?
No,
I don't have the
Frank Underwood.
cringe.
Right.
I don't have the cringe tolerance to watch that video, so I will never watch it. But I saw the last one he did, and it was pretty cringy. So
Oh, he's done that before, playing Frank Underwood?
He did it once before, like a year or two ago, and it was tough to watch.
So what are they teasing out? Because that show is never coming back.
No, it's not he's like
actors being actors.
He's like embodied the character. So it's weird, man. I don't want to. It's weird.
I don't know anything about Kevin Spacey or what happened there, but I will say that was one of the best television characters I've ever.
What about Kaiser Sose?
Yeah, listen, he's done a lot of things good, but Frank
Kaiser
Underwood
Sose was a great one.
Frank Underwood in House of Cards, that was such an excellent show. Really good. He crushed that.
Okay.
Hold on. Last one before we bring on Dietrich's coming on now, right?
Yeah.
All right. Last one before Dietrich. So we talked about sentiment, and then here's the money shot right here. Give it to him.
What is this?
Industrials historically have the highest correlation with the S&P 500 of all the S&P sectors. You've heard me say it, I don't know, 10 million times. It's making new all-time highs after a multi-year base. Do you think this is bearish for equities or is this bullish for equities?
This makes me think too. Last year, the Bears would do this thing where you would show a chart and they'd be like, now show the small caps.
Right.
And if you did that here, it would look the exact same way. Industrial.
Remember these idiots? Remember these idiots? We're like, oh, small caps are a leading indicator. They're going to drag the rest of the market lower. Now small caps are making new 52-week highs. Where are all these fools telling me? So these small caps are a leading indicator when they're underperforming, but when they're making new 52-week highs, they're no longer a leading indicator.
Look out for small caps in 2024.
Banks, biotechs, small cap industrials, materials, these shipping stocks.
It's time for the little ones to party.
I mean, they've been partying. Small cap industrials making new all-time highs. That's nothing new. Small cap tech, small cap materials making new all-time highs. Small cap discretionary. Look at that.
Even small cap real estate, it's all working. Yeah, small cap materials, I love this space to look for opportunities.
Yeah, because a lot of these material stocks don't get that big. You know,
they don't.
So this is like the mid caps, the smalls. You know,
that cyclical scan that we did, it's just a lot of these commodity stocks, a lot of these economy stocks, and when you go down the cap scale, you would be really surprised at just how many charts are actually making new highs already.
I'm gonna say that that was one of the better state of the market reviews that we have ever had, Spencer. I'm gonna just give us all a kudos there for that one. Shout out Strazza, Spencer, Fonz. That was a hell of a state of the markets, if I do say so myself.
We should have Christmas more often.
I'll be broke if we have more Christmases.
I
need a break. I need a break.
Consider the market stated. Let's bring on Ryan Dietrich.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Dietrich.
Merry Christmas,
Good morning, guys. I second that. Christmas is great, but I need a break also. So let's take a little break.
Strazza doesn't have kids.
Right.
Dietrich, he doesn't have any kids, so he's like, "Oh, Christmas is great.
Yeah.
We drink all day, we eat all day. Let's do this all the time." Me and Dietrich are like, "We're done. It's over. We're good. Can we move on?"
No. I mean, it's been a bull market, and yeah, I'd be broke too if we did this a couple more times. So let's take a break.
Listen,
I'm happy to be back, guys, and Merry
these
Christmas.
Bengals, right? With
really
these Bengals, Dietrich's having a rough time. You know, we can't all be Dolphins fans, but listen, you can be a Dolphins fan.
We like to have percentages. The Bengals, if they win their next two, have a 93% chance of making the playoffs. I'm aware that's a big if, but hey, they gave us a little chance without our quarterback, so we'll see.
They did. Listen, you got the future looks bright for you. So I'll give you that.
Yeah, hope so. Yeah.
Ryan,
if it's the AFC Championship game one of these years, you and I are going together. If it's Cincy, Miami,
Dolphins, Bengals, we might have to do that. Probably
it'll be
not
in Miami most likely. So I'll show you around.
Yeah. Sounds nice.
All right.
That sounds
Dietrich, tell me about this ongoing bear market they keep telling me about. Bear market rally, I'm told.
Yeah, I'll tell you. I know you've been beaten up a little bit. I know I've been crushed this year. Every time you point out something positive, they just pounce on you. It's been a little quieter lately, so maybe there's a signal there. And I know, when was Chart Summit, by the way? When was that? Like September-ish
Yeah.
ballpark, right? Probably.
Yep.
Yeah. So I know, Stonu Varghese and myself from Carson came on, and we were optimistic. We pointed out small caps look pretty good. I mean, I know people hated that. I know you guys have been on that train, and it's just really interesting because I love the chart you showed about the Michigan consumer confidence, and this is one of the things we've taught. I use the F word, fundamentals. I know we're traders on this discussion, but it is incredible just how many people feel so bad all year. What's that?
We're investors too. We have different time horizons for different strategies.
You're right. So I'll break out the F word a little bit. Fundamentals. I mean, but yes, it's incredible when you look at just, what do we always hear? And this is getting a little fundamental on you, but everything's more expensive. It is. But when you look at like wages relative to income growth, and when you look at or relative to inflation, I should say, wages relative to inflation, income relative to inflation, all-time high net wealth. I mean, things aren't perfect. I don't want to be Pollyanna. I know you guys had a discussion about a recession. Our shop was one of the very few that I know of a year ago was saying no recession. And in the first line of our outlook that came out last January, we said we could hit all-time highs this year. Wasn't popular. Here we are. We still do not see major signs of a recession taking place. And that tells us what? Probably you can continue to be overweight equities like we've been all year with a tilt to small and mid caps. Guys, we added equity risk in March and in October in the real money that we run for our Carson partners. March and October wasn't very popular times. We did it. People thought we were crazy. We're still seeing reasons to think that, stocks are going to be pretty good next year. One quick stat, and I know you probably talked about this, presidential year, yes, but the last 10 times a president was up for re-election, the stock market was higher. 1960, 2000, 2008, those were lame duck presidents, not very good economies, not very good stock markets. So just some context around, there's a lot more context than that, but just some things to think about as we head to next year. I think Washington's going to pull some levers to keep things going is the short answer.
How about the fact that small caps, people were talking about how small caps weren't keeping up, Perhaps the Russell 2000 index was not keeping up, where it's loaded up with regional banks and biotechs, but small cap industrials, small cap materials, small cap tech, small cap discretionary, all working great. So I think it gets back to people focusing too much on the indexes and being blinded by those indexes because they're not taking the time to actually look at what the stocks are doing.
Yes, it's amazing how that happens sometimes. And the S&P 600, right, we're more focused on that. I mean, it is true the Russell 2000. First off, there's not 2,000 stocks in there, but a lot of them don't make money. The S&P 600, a little more companies making money. It's outperformed a little bit. Maybe there's a signal there. But you're right. It just shows that people take the easy way out. Literally last week, I saw a pretty well-known podcast with a pretty well-known strategist, and their guest was talking about a bear market, this wild bear market in small caps. I'm like, why they didn't jump all over him for saying that first off. But second, I don't know. I mean,
podcast?
I'm not going to say. I got to be careful. I'm not going to say.
Why not? What podcast?
Yeah, I don't want to get in trouble. I don't want to get in trouble. This podcast out there with a different. Yeah, I gotta be sort of careful. I do subtle jabs. You follow me on Twitter. I do subtle jabs all the time, and I can't call people out. I work for the man. I gotta be careful. But anyway, like the Russell 2000s up 16% for the year, hitting 52-week highs. All the people on this show know that. Yet people still saying it's a bear market in small caps. Just fascinating. When you think about one quick one, though, I just did this. So up 8 weeks in a row, right? Up 8 weeks on the S&P. I just did it this morning. This was wild. I mean, I thought it was wild. 1 year later, guys, after an 8-week win streak since 1950, S&P up 16 out of 18 times, up 9.1% on average. That's about your average year, I'll admit. Median about 11.4. Again, not all that abnormal, but higher 16 out of 18 times a year later after an 8-week win streak. Stuff you guys have been saying, I've been saying. This blast of strength we've seen the last 2 months is not consistent with the end of a bear market or the end of a bull market. It's the start, honest to goodness, of probably a new bullish phase. Drives people crazy, but it is what it is.
Ryan, you put out, the best stats and you're widely followed. Why don't you talk a little bit about how you guys weigh all of this information internally? Like you came on here and started talking about like the economic picture and fundamentals, right? I know a lot of these stats make it seem like you got to be balls to the wall bullish, but I think you might take some of them with a grain of salt. Talk to us about how you guys weigh all this information internally.
Great point there. So on the Carson Investment Research team, we have about a 15, 16 person team. We have a committee with several different voting members, and we weigh all this stuff. So the stuff I look at, stuff I just talked about. Sonu Varghese, I know I sent you the chart, Spencer, if you want to pull it up. Just like inflation. I mean, Sonu was one of these people a year ago saying inflation is going to come back like a rock. What does that mean? Well, if inflation comes back, it means the Fed probably can start to cut rates sooner. Now, I know it took a while to get there. I think the market sniffed this out for a while. So we kind of play all that in. And then you consider the fact, oh, by the way, productivity. Our country hadn't had high productivity for a while. Yeah, we had high productivity during COVID because half people lost their jobs. If you had a job, you had to work higher. The last time we had strong productivity was the mid-90s. Okay, think back to the mid-90s. What happened? Oh, that's right, 94. The Fed hiked a lot, probably too much. Okay, whatever. Upset the apple cart. Bonds had a bad year. Orange County went under. Some of that sound familiar. Then they started to cut, and Greenspan said, I can cut because we have higher productivity, which means inflation will have a lid on it and wages can stay higher. So our outlook's not out yet. It comes out in early January. We think with this higher productivity we are going into in our country, it means the Fed can start to cut, wages will stay high, inflation stays capped. All of that should suggest, again, a better economy, which for investors and traders on here probably means you want to stay quite long equities. And we're overweight. All year we've been in this camp, overweight the cyclical areas, right? We like financials. We like industrials. We've loved small and mid caps since the second half of this year. Believe me, it wasn't fun in the third quarter, but we still expected this outperformance. And some of those things are playing out. We have more even weight technology, so that wasn't great. Believe me, a year ago, I wish I could have said I'd be overweight technology. But it is what it is, and we've had a pretty good year overall, just being so overweight equities. And honestly, I'm more proud of our bond call. We came into this year having no treasuries, very little intermediate, all short term. We added a little intermediate over the summer. We added our first treasuries to the money that we run 4 weeks ago now. 4 weeks ago, and again, with the Fed likely being done, maybe it's time to do a little bit of bonds. I mean, ag's up 5%, not great, but it was down 4%, felt like yesterday for the year, that is.
What do you guys think about the direction of rates, right? Fed being done is one thing, but are rates coming down this year, or are they kind of stuck sideways? What are you guys seeing there? I think they come down, right?
Good question. Yeah, we think down a little bit. I mean, we think the Fed probably cuts 100 basis points, and a lot of that's priced in. If you look at clearly, if you look at what's happened in the bond market. So, we think we think ag at least will gain between about 5 to 7% next year, 2024. We think bonds will be low double digits. Sorry, stocks will be low double digits, with small mid probably doing twice as well as what we think next year. But again, yeah, I mean the lid is there on things, and I mean, I don't want to get too in the weeds here, but it is an election year. Does that play into some of the Fed's thinking and Washington, all the pressure there? But the bottom line, we didn't think March would be the first cut, but then you see some of the recent economic data with the PCE we just saw last week. I mean, March is clearly on the table. And again, the market sniffs it out. I mean, again, I mentioned 94, 95. 95, the Fed didn't start cutting until the middle of the year. What's that?
Just look at the Fed fund futures, right? We don't have to guess the economic
data. Exactly.
But just see.
Yeah, and in 95, the market sniffed it out. The market took off the first half of 95 before the cut even happened. So we don't need to get too in the weeds. The Fed fund futures will tell us in the 2-year, to be honest. So, we think a little bit lighter, a little bit lower yields is what we're looking for next year. Not a major
95
drop.
was a great year.
A major drop is probably a recession. Go ahead.
Great year, 95. Great year. Question for you. Bonds and stocks and bonds moving together these days, right, Mr. Dietrich. Does that, two questions. Number one, is that here to stay? Because the way I like to place my bets is that correlations remain in place rather than making a bet that correlations are just going to change tomorrow out of nowhere. So I'll wait for the data to tell me that the correlations have changed. Does that correlation stay positive throughout next year? Number one. And number two, at what point do lower rates no longer become a tailwind for stocks and more of a, oh shit, what the hell is the bond market pricing in, right?
Well, good point. Yeah, good point there. I mean, the short answer is yes. I think they will trend together, more stocks and bonds, likely higher next year. And I know you guys have been on gold. I mean, we added a little bit of gold in some of our tactical models back in March, right? When all the regional bank crisis, we said we don't want to own bonds. We didn't see the Fed cutting back in March. Thank goodness we didn't buy more bonds back in March. We bought gold. And again, I think we're in one of these worlds like when gold went up 11 years in a row, from, if my math is right, 2000 to 2011 or 2001 to 2011, whatever that frame was. There are a lot lot of years, stocks did really well. We think we could be entering another period where gold also, we're not into the worlders or gold bugs at all, but we think gold can do pretty well in this environment as well, along with stocks and along with bonds. Now, that's a great question there on how low yields go, because eventually the bond market will say, "Whoa, there is trouble coming," right? And I like to say I keep it simple, and I know you guys look at this stuff too. What are the credit markets telling us, right? What are triple B spreads, corporate spreads? If we start to see more stress in the credit markets with yields going lower, then maybe that's the warning sign. And back in March when we added equity risk, and in October when we just didn't see major stress. We were promised a credit event. I know you've talked about that, and we all saw the same thing from some certain people, promising a credit event, but the credit markets weren't worried, and now we've had literally like one of the strongest 8 weeks rallies in the history of the stock market.
What does that mean, a credit event? What does that mean?
I don't know. I guess it means, banks are going to start falling apart. And I'm assuming. I don't know. I mean, I guess it means credit spreads will blow out and trouble comes, but we haven't clearly seen it yet. And fortunately,
the bond market, anytime soon. Dietrich's absolutely right. The bond market is telling us all year long to buy stocks, right? The credit spreads have been tight all year.
Right.
Hell, what? Stress and credit. Like, nothing.
And if you take a step back and think about
the yield curve, I'll also jump a little on a soapbox. I mean, the yield curve, we've heard about do you remember when the yield curve inverted, by the way, everybody?
Oh, yeah.
April 1st of 2022. Like, you can't make that up. April Fool's Day. That's the 210. And we've been hearing forever a year, yield curve inversion, LEI's negative for, I think it's 20 months in a row, year over year. M2, explosion up, explosion down. All these things we've been hearing about. Fortunately, on our team, I know you guys do this too, we kind of dig into the data. Sonu does an amazing job digging into the data. He's like, okay, we're not ignoring it, but there's just all these other things that are saying, listen, the economy is not about to fall into recession. A year ago right now, everybody's paying $3,000 for Taylor Swift tickets, getting ready for the summer to go take over, the cruel summer to go take over. And we joke, there's no way you're going to have a recession when you got Taylor Swift coming out this summer. And you could argue maybe she helped, according to the Fed in Philly, right?
There's a chart.
It's all just amazing.
There's a chart floating around, which is so funny.
Yeah.
It's like the S&P divided by M2 or something ridiculous that says we've been in a bear market since the roaring 20s.
Is it any surprise that the laziest and most obvious and most well advertised bear market indicator ever just maybe won't work this time?
It wasn't. It was the recency bias, because we got an inverted yield curve before 07 and 2000. So because these idiots don't know that there was a whole millennium before that, right? Like the stock market wasn't like invented in the year 2000. You could go back. There were yield curve inversions and recessions and all those things before 2000.
Whatever the yield curve is doing, banks seem to really like it. And I think that's important.
And the other thing, there are other countries besides just ours. Right? You could look back at the UK, Germany. A lot of other countries have had inverted yield curves. And you know what happened? Honestly, nothing. Australia, too. I mean, so again, we're not ignoring it. I'm just saying when the weight of evidence is saying, like we've said for a while, no recession, it is what it is. So it's good to look around the globe as well for some of these things, I think.
All right, Ryan, you get one stat, right? One of your stats. Somebody says to you, is 2024 going to be a good year? You say, oh, it's going to be great. You get to show them one stat to support that. What's your favorite one that really?
Well, I've got a few written down here, so that's good. I mean, this one, it sounds pretty promising, right? We just had more than 65% of all the stocks in the S&P 500 hit a 20-day high. I know you guys will probably talk about that. I've talked about that. 1 year later, after this triggers, higher 10 out of 10 times, up 18% on average. Give me one more if that's okay. More than 90% of all stocks in the S&P just are above their 50-day moving average. 1 year later, up 14 out of 15 times, average return 16%. I did give you two there, but those are just many of the things we've just seen that suggest, again, we're going to have a pullback. I mean, usually we have a really good December. You know what happens? January is not as good. Maybe you give some back in January. Not the end of the world. We would still be a pretty aggressive buyer on any potential pullbacks, and they're going to happen. The scary headlines are going to be there. Just know that, the
hold
trend
on,
is still in
Dietrich.
place.
Hold on.
Sure.
You just threw out a lot of numbers there. I was told that it was only 7 stocks that are going up.
Yeah, that's true.
Is that not?
Well, I've heard that a lot too.
He's saying
it's not true, is it?
Stocks.
Trust the thrust. Trust the thrust.
Yes.
Ryan,
And when you manage models and things. It was the first half of this year wasn't easy if you didn't have an overweight to tech and things like that. But we're starting to see it, right? I mean, we know this. We're starting to see this, the dispersion. I mean, like a couple weeks in a row, like all 11 sectors were higher just on a weekly basis, just recently. Yep. But I haven't seen that in a long time. So again, it was never really just about 7 stocks. We know that. But fortunately, one of our big themes, again, kind of what you guys talked about before I came on, just the idea that small and mids really could do pretty well next year. And the fact that everybody's still calling it a bear market. Not everybody, but some people are still calling it a bear market in small caps at 52-week highs. That's music to my ears as someone who's been overweight small caps, since the middle of this year.
The sentiment being this pessimistic amongst sell side consumers, that's not bearish.
No, but listen, maybe the fact that breadth was thin, and it was for the first 12 months of this bull, you could point to breadth and say that's not great. That makes me want to be cautious, and that probably would have been a fair or the right take.
It wasn't, because you can't have a conversation about market breadth without having a conversation about sector rotation. And we had sector rotation all along. That weak market breadth was bullshit.
No, it was weak. It was weak. It was historically weak, but you can no longer say.
I think it was historically weak if you calculated it. If you calculated it to fit your narrative, it was weak. But it wasn't. It wasn't weak.
The point is that whole argument is gone now.
It always was. It was always gone. It never existed.
Point is, whether it's percentage of new short-term highs, percentage of stocks above the 50-day moving average, like you just showed, these are extreme readings that we don't see very often. This period over the past few months reminds me of May, June 2020, where we had some monster breadth readings. Other than that, you got to go back to crises. You got to go back to the pre-financial crisis or just after the financial crisis and just after the .com for readings like these. So.
Yeah, Dietrich.
One final one. If you look at what people are doing right in October, you look at some of the retail crowd are doing. Retail crowd was selling more this past October than they were like at the COVID lows, right? According to some data. So just fascinating on a 10% standard correction after literally a really, really good start to the year, which stocks do go down, right? And when they do, I think hopefully people listen to the right people out there and don't panic and sell. But unfortunately, I've seen this my whole career for 22 years, and there's a lot of information out there, but there's also some good information. So hopefully they're following you guys, and maybe Carson as well.
I hope they keep following the wrong people. It's better with better data.
Well,
let them sell into the hole because of Black Monday or whatever bullshit they were telling. Good. I don't care.
Yeah, Mondays literally had like the strongest year ever this year, right? If you just look at Mondays, I've shared the stat, but Mondays are rarely ever down. It's incredible how strong Mondays were this year. We were promised a Black Monday half the year.
I have a good question. Can we talk? I'm really interested in your thoughts on money markets. The way I see it is that's fuel to the fire. It's an unwind that could drive stocks higher. You think I'm overthinking that, or you think that's right?
No, I think it's right. I mean, what is it, $6 trillion, give or take? And how many people were comfortable with the 5%er at the start of the year? And then you realize, NASDAQ's up 54 or whatever it is. So, yeah, I think there's I hate to say cash on the sideline. It's cliche. You turn on CNBC and someone's probably said it by now. But it's really true, right? And that doesn't, I want to be clear, it doesn't mean it has to go to stocks. Maybe bonds. I mean, bonds are looking better potentially here. I mean, bonds were historically expensive this time 2 years ago. Bonds are a little cheaper now. But again, I still think stocks will do better. I want to be very clear. But again, there's just a lot of money that could move around from just the safety of cash, and that again could help stocks, bonds, honestly, gold. I know it sounds wildly bullish. They all three probably gonna have a good year next year, but we think they will.
Yeah, I mean, think about it. The argument of Granny locking in her 5% or whatever it is bullshit, because you've got $4 trillion in institutional money markets, right? So forget Granny. Let's say assume all $2 trillion of retail assets are all Grannies locking in 5%, which we know is not true, but let's just assume you still have a historic level of institutional flow into money markets, which could not have been a worse decision. You couldn't have made a worse decision as a portfolio manager than being stuck in a shitty 5%. And then after you factor in inflation and taxes, you're actually in the negative, depending on what state you live in, right?
Spencer, maybe I know I'm probably near the end. Spencer, can you show the chart when you're down 10% and up 10% on the S&P? It's just one of those contextual things I like to share. So again, we were down more than 10% 2 years ago. Going to be up to there. It is. Relatively small sample size, but I don't know. My math says 6 out of 6. So I mean, Steve, here's another one. When you're down a lot and you have a good year, that good year tends to continue. Is it as good as the previous year? No, we're probably not going to gain 23% on the S&P next year. But again, low double digits, I think it makes some sense. Just some more numbers to lay on the fire here that says, again, come back in a year, probably going to have double-digit returns, I think, in equities.
It's almost like, people act surprised by this. It just goes back to the point that markets trend.
Yeah.
If it's the beginning of a new trend, typically it lasts more than a year. This is all great. Ryan, when do we get crypto stats from you?
I'm limited. I will say this. Thank you for the Solana call. You guys made my Christmas there. You guys are talking about that on Trends and Friends and some places. So that was pretty nice. I'm kind of limited what I can say with cryptos, but I mean, in mid-October, what did we start to see? We saw cryptos outperforming, right? The market was crashing. I mean, well, not crashing, but the market was weak. So I can't say too much there. I'll just say thanks for Solana. How's that sound?
Dude, Solana, $50 billion market cap, Bitcoin, 850 or so, Ethereum, 250, 300, whatever it is now. These are serious market caps.
Yeah. No, they really are. And I mean, that's more of the money, more of the risk on that's coming. And it's, I think it's just all part of the process. I mean, just this is a little different, but like just deals, right? Turn on TV, there's deals like $14 billion deal here, $14 billion deal there. And I know AOL was bought out by Time Warner in 2000. Everybody loves to point that one out. But there have been a lot of deals in our country's history throughout time. It's just more of that confidence, the credit market's unlocking. That's a good thing, I think, is that this bull market evolves. And honestly, this economy evolves to see some big deals out there. I like it.
The IPO market's waking up too, right? And people say, "Oh, well, there's not many. There's not nearly as much as there were."
It hasn't quite yet, but it's trying.
It's moving in the right direction, I guess is the point.
It couldn't move in a worse direction. It had to go right.
Listen,
Dietrich,
nice
final question: who wins the Super Bowl and who's playing in it?
Ooh.
Boy, I mean, you asked me yesterday this time, I might have said one thing, but now I know you're not going to like it. I think it's going to be the Ravens, and I don't know who. The Ravens just look awfully, awfully good, especially after last night. So I'm jumping on that bandwagon. I'll say Ravens. I'll just say a repeat of last night. I don't think the Niners are that bad. I think that was a preview of the Super Bowl. I think they'll do better. So
all right, I'll fade that sentiment all day. I'll take my Dolphins. We'll see what happens this weekend against Baltimore. We'll see what happens.
It'll be fun.
Ryan, Dietrich.
Well, guys, thank you. And thank you to all you've done for listeners and viewers and everything. I know you guys, you call it like you see it. I try to do the same thing. And I know you've had a great year, and congrats. And I really do enjoy the Trends with Friends you do with Howard and the gang, JC, and everywhere else. So just thanks for everything. Thanks for having me. And look forward to talking again next year, I guess.
Hell yeah. Happy New Year, Dietrich.
See you guys. Ryan. He's one of our favorites. Always so good. I'll tell you who won't be in the Super Bowl. Philadelphia Eagles. Terrible. Not
that
good.
was a fun game. Let me tell you.
It was.
The Dolphins game sucked just to watch as a fan. The Giants game was awesome as a fan.
Why did the Dolphins game suck?
It was a little slow. It was slow.
Why did the Dolphins game suck? The two highest scoring offenses in the league, and they scored like 30 points combined or something.
The Dolphins also have a really good defense also. So does Dallas. So what do you want?
I'm just saying, by the
way, the 1972 Dolphins, I don't know if you heard, were undefeated, greatest football team of all time. Let me tell you, was the most boring team to watch in the history of the NFL.
All right, fine. Maybe you'll win the Super Bowl this year then, but that game was boring. The Giants game was lit. That was a game. It looked like we were coming back.
It was
Taylor
awesome.
Missed some big throws there.
It was awesome.
He's just not a good quarterback. What happened to DeVito? Oh,
they benched him. So
I know. What is that?
And then
showing like the discrimination against Italians.
we had our fun. Fun's over. But after the game, they asked our coach, Dable, what's going on for next week. He said he hasn't decided yet. So I don't love that, but we'll see.
Give the fans what they want. Put the kid back in. Come on. What's the difference?
I agree.
Tyrod Taylor, get out of here.
I'll bet you. Here's a prediction. We beat the Eagles 2 weeks from now. That would be a classic Giants thing to do. It's just,
last game of the season.
A worst draft pick.
Implications.
Yeah.
I love it.
All right, let's talk about what's moving here. We got. Speaking of deal flow, that Ryan.
We got a bumper? No bumper.
We got a few deals. Yeah.
Bump me.
We had a few things. All right. In no particular order here, Lionsgate. They've been trying to figure out what to do with their business for like a couple years now. They are spinning off their studio business. They're merging it with a SPAC. Didn't realize that was still a thing, but it is. So Lionsgate, the ticker LGF /A and /B, that's now just going to be the TV business and Stars, and then Lionsgate, the movie studio, is going to be a separate company, separate entity. And the SPAC ticker, if you care about such things as SRCM, it's going to change obviously when the merger gets completed. But so Lionsgate is spinning off their movie business into a separate thing. Stratasys. This is pretty interesting. Stratasys, the 3D printing company, has been involved with the saga now with Nano Dimension for like 9 months, where Nano has been trying to buy Stratasys, and they keep changing their offer. The latest offer is in this morning. It's at $16.50 in cash. They had previously offered $18 in March, then $19.50, then $20, then $24 in July, then $25. Now their offer is revised down to $16.50. So this is like their sixth offer to buy Stratasys, and they're trying.
Here's what's amazing. Stratasys was one of these hot stocks like when I was in college, like 15 years ago. This was a 3D printing name. The fact that they're still around, let alone have a deal, sounds like on the table, is just wild.
They keep rejecting it. This is so
Dude, back in the day, there's a picture of it somewhere. I'm going to find it.
Crazy.
I used to host this show on CNBC. It was called Fast Money. And this was like in 2012, 2013. And I remember being like in the NASDAQ, sitting on the set of the show, and they brought a 3D printer and sat it on. It looked like a child's toy.
Yeah.
That was the top. All the 3D printing companies completely crashed from there. It was hilarious. I'll never forget it. I got a picture of it somewhere. I'll find it.
3D printing, not like AI.
No. What did happen to that company that was 3D printing organs? I don't know. Okay. Elsewhere in the news, Manchester United got they sold, the Glazers have been trying to figure out what to do with that as well. They sold a quarter of the team, 25% stake for $33 per share to a British billionaire, Jim Ratcliffe. So values Man U at about $6.3 billion. A couple of biotech deals today. Bristol Myers buying RYZB for $62.50. AstraZeneca is buying GRCL for $1.2 billion. And
you're seeing a bid across the whole space. So these deals are just so important because they speak to the economics, right, that are going on inside this industry. The fact that these guys are able to get money again is huge, right? That was investors' biggest concern for a lot of these biotechs. So deals are back on the table. That is a huge positive.
And then just China bouncing this morning, off those bases since Friday. But
listen, I know that we've said it on here a couple times, but I think it's so important to point out the ones that look good, the Chinese equities that look good through this mess, keep an eye on those, keep them on a short list, right? Set your alerts, because when China finally bottoms, and it will, as bad as it is, as much crap as we talk about this country and their equities, China will bottom. And those ones that have looked good through this volatility you're gonna want to be in them. So find the strongest ones now and be ready, because I think China does join the party at some point this year. We're already seeing breadth expand internationally. I don't think they'll be left out.
Well, the club of non-participants is getting smaller and smaller and smaller and smaller. So eventually, it would stand to reason that everyone would join the club. But
I like that. The club of non-participants continues to get smaller. I might steal that. That's good. Yep.
That's good, Spencer. See, that's good. See, attaboy.
Good job.
I'm still waiting on Staples. I mean, not really waiting on Staples, but I'm just
yeah, but Staples on a relative basis continue to underperform, continue to make new multi-year lows, and that is a classic characteristic of bull markets. I mean, I mean, we've seen it a zillion times. Why should we expect anything else? No.
You guys, what do you think about these precious metals? Are they finally going to get it done? I'm sorry, are we done with the news?
We are done with the news.
Some good
There's
stuff.
not much news going on.
Listen,
OpenAI is raising more money because this shit's expensive. But,
what's do we get a valuation quote?
no, yeah, he told me I did have it. They're raising 100 million, I think.
At what valuation?
Um,
See, when these companies come out and raise, it's nice.
They're raising at $100 billion valuation. That was from Friday. Yeah.
All right. So I think last time it was 80, a couple months ago.
Raising between 8 and 10. Yeah, raising between 8 and 10 at a $100 billion valuation.
Listen, this stuff is expensive. They have a lot of high-paid employees over there. They are just burning through money. I think it'll be interesting when we look back in a few years. Will ChatGPT be the leader? Right? Will it be as dominant as we think it is today? I don't know how great the economics are there. I think they'll eventually have to get folded into one of these mega cap techs, and I think that's being priced into Microsoft stock already, right?
Maybe
a world where Microsoft just outright owns ChatGPT.
They almost did. They
how
did for like a day.
How material could that possibly be?
Not very material to Microsoft.
Microsoft is $2.7 trillion in market capitalization. Let's say they own all of AI. Like at this point, like how much of an impact does that actually make on the value of Microsoft? Like,
I mean, 100 billion is not nothing, right? It's a mega cap stock.
100 billion is 100 billion is nothing compared to Microsoft. What do you mean?
Well, not really. It's not nothing. So this is a startup, right? So say that valuation goes 10x. That's $1 trillion. You're looking at a third of Microsoft's current market cap. It's not.
All right.
It's not easy to think, right?
Oh, fine. If that happens, sure. But currently, it's not material, as we know.
If some of these sell side estimates about the total addressable market are right, then you could make a pretty reasonable assumption that market cap grows a lot and does become pretty material to Microsoft. We'll see.
Because you're worth a certain valuation doesn't mean you can just go ahead and drop $100 billion. The
bigger point is the company's not making any money right now, right? That's why they're raising more.
Cash on hand, $80 billion. Microsoft.
I'm not saying Microsoft's not making any money. I'm saying ChatGPT.
Oh no! I know. I'm saying to JC's point that they're not. It is material from just a transaction standpoint. Anyway, moving on.
I want to talk about metals. Is gold finally going to get it done? Because it looks ready to me. It looks really ready. The silver miners are waking up.
Throw up the gold chart.
Yeah. It looks like the animal spirits might be here and finally supporting a resolution of this multi-year range in gold. And again, I mean, we were talking about it last week. We're having some chart problems here. We were talking about it last week. JC, do you agree? I don't think the environment or the tape could be better for a precious metals breakout. In other words, if it doesn't happen now, when does it happen? Everything's going the right way for these guys right now.
Lower real yields.
Yeah.
Lower US dollar.
Right.
To me, that's the perfect environment for a breakout in gold. Now, let's see it, right?
And metal stocks really being the leaders since the FOMC 2 weeks ago now, right? So over the short term, metals are just so hot. So it makes sense for gold to participate in that outperformance. Talking about gold stocks, silver stocks, and we're seeing them wake up a bit. So I think there's another group that you want to keep really, really close to you right now. Keep on your radar. When that range goes, I mean, there's going to be some great opportunities in precious metals. We like Alamos Gold. There are some trading vehicles I like to use. I was dabbling in the First Majestic last week. We'll see. I got a lot of metals going on right now. A lot of metals trades. I got some Freeport. I got some Steel Dynamics. Spreading the love to all the metals. Base metals, industrial metals, rare earth metals. You know, uranium's an industrial metal.
It's a lot of metals, man.
A lot of metals.
How is uranium an industrial metal?
It's a metal. I don't know. Get water back.
I don't know.
So I did find the picture of me at the NASDAQ. Actually, I'm not even in the picture. I must have been the one taking the picture. Throw slide 2 there. That is, so you guys don't think I'm crazy. That was the 3D printer that they brought on the set of Fast Money. Look at that thing. Doesn't it look like a child's toy?
I was just thinking that.
Doesn't that look like you can't make this up. Doesn't it look like a child's toy?
Is that something you built yesterday?
it looks like something that would be part of something I was building. Isn't
Yeah,
that
that's
funny?
funny. Did you get to play with it? Like, were you guys all touching it? Like,
do you remember what is being printed?
I don't think it was like
Nothing.
plugged in, or I don't know if it used batteries or something like that.
Oh.
I don't really know.
Solar powered.
I don't think it was solar powered. I think it was battery operated. Yeah,
I'm
isn't that
sure
hilarious? That
was.
was the top when everybody saw what bullshit these printers were, and it just looks like a child's toy. That was the top.
I'm sure back then there were some solar powered 3D printing startups.
I don't know. All right. I saw an interesting thing in the hot corner. If you want to go there for a minute.
The ocular.
No. What? It wasn't the ocular. No, it was the bottom half that I thought was interesting. So let's
do it. Yeah, he bought some good ones.
So hot right now.
Haven't seen too much representation of Congress in the hot corner of late. So
Spencer likes the Michael Burgess, and Michael Burgess likes buying the leaders. So he came out here, bought some Palo Alto, bought some CME Group. Listen, Palo Alto's been as good as anything. You know, this is one of those stocks really early, back to new all-time highs. You know, like Q1 or Q2 of this year. Had a nice base on base pattern completed. This one's going on to hit already its second price target this year. So that's awesome. Cyber stocks remain hot. I like this political filing. I think CME was a good one too. All right, came in the same filing. And then just shout out to this. Go back to the table. I want to get the name right here. Ocular. I was going to call it Oculus. So Deep Track Capital, another one of these biotech firms. Spencer just came on here breaking the news, talking about, you know, some M&A movement in biotech. Another thing that we continue to see is on the hot corner, these guys are just buying up massive stakes in these biotechs, right? Every week. This is a brand new 13D. That means brand new position. Just bought what, 8% of the outstanding shares? Right. So
Is that because we're seeing all this buying, or is it just because it stands out because there's so many biotech stocks?
There's always a lot of biotechs on here. We've seen large new starter positions over the past few weeks, right? So brand new 13Ds being filed, or in this case, a 13G, not additions to old stakes, right? So we're seeing new positions be put on in size. So no, this is a little bit different the past month, right? All the big biotech players are coming out making some, you know, massive new investments. And we talked about it. Baker Bros is going to have a lot of dry powder when Seattle Genetics, when that deal finally gets done. They're going to have like $10 billion in fresh capital.
This Michael Burgess guy, he's from Texas, this guy.
But listen, $10 billion, right, in cash on the sidelines, because when SGen, when that deal gets done, they're going to get paid in cash for the shares. They're going to have $10 billion, and that's coming right back in to biotechs near you. So I'm excited to see what they do with that cash when they redeploy it.
All right.
We'll be all over it. Spencer got a question, I think, about Baker Bros, why we talked about it on here and not the hot corner. Like, the reason for that is really simple. On the hot corner live calls on Wednesdays that we do, we're talking about these insider stocks, but that look good, right? That have charts that we want to be buying. On the segment that we do here for the morning show, we're just talking about what hit the list today, right? The charts might not be charts that we want to be buying. We're going to cover them on here anyway, right? Because these are, you know, this is timely filing information that we're trying to hit on. When we do our show on Wednesdays, the charts have to look like charts that we're buying, or we're really not going to talk about it. Disclaimer.
All right, let's do a chart report.
Hit it.
I thought this was fun from Ian McMillan. After all the ink, after all the words that were spilled about rates this year, we are right back where we started 12 months ago. I thought it was fun. And clearly Pat did too.
Full circle, right?
Yeah. After all that. Couple of fun China charts that caught my eye. Where's China? Where's China? Oh no, I like this one too from Renmec. Healthcare for next year. I can see it.
I mean, I'm in. You guys know me. I mean, how many times have I talked about it? You guys think I'm annoying at this point. But when Jeff DeGraff says it, then right? I see how it is.
China, we've been discussing ad nauseum. There you go. And then this one too. This is an easier chart to read, so we'll go back there. But just like we've been saying, not a surprise, not news, but just brutal. Anyway, that's all that that's what interested me in chart report. As always, this goes out every single day that the market is open. It is free. Get the link in the description on YouTube if you want to. If you're more of a QR code kind of person, then this is a QR code for you.
It's my favorite email every day.
Yeah.
That one in the hot corner, I think, tied for first.
Definitely.
I think so.
And they're both free, and they both go out daily.
Let's do a quick rundown. Dow futures up 20 points this morning. Quiet morning. S&P up 10 handles, about 20 basis points. NASDAQ 100 up 40 basis points. 30-year futures up once again, 23 bips. Gold flat. Silver down 1%. Copper up 0.5%. Crude oil up 2.6%. And the dollar mix. And then, of course, in the old funny money, you got Bitcoin is actually down. Still down about 900 points. Do I have that right? Bitcoin down 920 points to about 42,600. Ethereum down 1% to 2240. Solana up down 6% to 113. That's just a little quick rundown.
I mean, good. These things had a busy holiday weekend.
They did.
Yeah. Yeah, I'm seeing everything pretty much up except for crypto.
Before we do recess, I want to throw out for you guys. What are you thinking? It's Tuesday. We got this is the Santa Claus rally period. Stocks tend to do very well in this environment.
We didn't even mention that today. That's right. We're in it. We're
in the Santa Claus rally period. This is low liquidity. This is what Strazza likes to call good parking spot season, right? Empty parking lots in the hedge funds.
Great parking spot season. You can get spots right in the front row these days at these hedge funds.
All the Ferraris and the Lambos and the Mercedes and stuff like that, they're not at the office, so the staff can get closer parking spots. Is that what you call that?
I remember this time of the year well for not having to park in the overflow lots and walk through the cold into the office. So good times.
Those were the days.
Because you weren't a billionaire trader at the time.
No, right. I didn't have a reserved spot.
Got it. How much money do you need to make the firm to have a reserved spot?
Not all PMs get one. There's 100 PMs, so you got to be good.
Oh, I like that, though. I like that. It's the little things, little incentives here and there. This is what I like to call whipsaw hunting season.
Yes.
This is one of my favorite times of the year because of the low liquidity, because of the better parking spot season that Strazza is talking about. You got the B squads on the desks. They're not allowed to do much, right? So because of that, I've found over the years consistently, I might add, that extended trends coming into this period tend to get more extended. And then once the bosses are back at the desks, you get the squeeze in the opposite direction. So this is the type of environment where I'm looking for extended trends to reverse at the beginning of the year. So we call it whipsaw hunting season. This is the time. So let's keep our eye out. Let's discuss it here. Some different candidates, perhaps.
But important. All right. So we have a freshly squeezed report, which I got a 5-hour drive today. Probably doesn't get posted until tomorrow. But what we're doing is we're looking at all the most heavily shorted stocks. I think this week, especially in this tape, right, this type of market where risk appetite is really just blowing up since October, I think you want to watch these hated names, these shorted stocks this week for some massive squeezes. What you said right there, JC, is really important, so I'm going to repeat it. Follow the direction of the short-term trend this week, right? Maybe everything changes next week when we get to 2024. But for now, these stocks that have been squeezing, probably keep squeezing. And there are some really good ones that are set up right now. And I'm going to take a flyer on one as soon as the show ends. We also, in diving into our short interest data, are finding, very interesting, and doesn't surprise me, days to cover. A really high days to cover ratio is more powerful than a high short interest, right? If you have a 30% short interest, but a 1 day to cover ratio, you tend not to get squeezes. If you have a 20% short interest and a 10-day to cover ratio or 15 days to cover ratio, you're going to see squeezes, right?
That's very interesting.
We expanded the scan a little bit to allow some, 15%, high single or high teens short interest onto the scan. We used to put a floor at 20. We're letting those high teens come onto the list now if they have high days to cover ratios, and we're finding some really, really interesting opportunities.
You know what's interesting about that is that the goalpost is always sort of shifting a little bit, right? Because it definitely used to be 25% short interest, good to go, right? Squeeze me.
Right.
But now maybe it's not necessarily the short interest, as you said, it's the days to cover and the goal, and maybe in a few months it'll be something else, right? It's always, the market gets wise to it, right? So it's always changing.
And as good as the short interest is, right, it leaves out anything about the character of the stock or the way it trades, right? The cool thing about days to cover is that it incorporates the daily trading volumes that the stock tends to see. And that's super important, right? Because if a stock is really low activity or low liquidity, doesn't trade much, has a very low average daily volume, and you have a nice short interest there and some volume comes into that name, God forbid, you can see massive moves. So a couple on our radar that we're going to write about, and that will be out tomorrow.
All right. We will keep an eye out for that.
Little recess. I got some funny stuff.
Yeah. Let's do some recess. I'm game.
So I was looking through some pictures, so you guys didn't think I was crazy. So I wanted to show you the 3D printer from the show that I used to do, and I found some other pictures that were pretty hilarious. This is in the old days, the early days of Instagram, right, where I was a grammer back in the day. I haven't used Instagram in God knows how long, but in the old days. So why don't we? I want to show. Look at me and Fami. This is 2014. Me and Fami on Fox together. That's pretty. Right? Come on, that's a good. Fami, this is Joe Fami. Shout out to Fami. Him and I are going to be on the Compound and Friends together next week. Strazza, are you jealous that it's not?
No, I mean, listen, you'll hear about it in the chat. You'll hear all the Where Strazzas. It's fine.
All right. Strazza and I a year ago were on the show and we had a good time. Strazza's a little jealous. Gonna be me and Fami. I don't call the shots. I just accept the invites.
I know.
Here's another one. So this is like 2014, something like that. I walk into the green room at Fox, and like I walk in by myself because I was doing a lot of TV at the time, so I didn't get escorted or anything. I'm just walking in by myself. There's a bunch of people in the green room, which, by the way, none of the green rooms in any of the networks are actually green. So as you can tell here, right? So we're in the green room. There's a bunch of people, and the Heisman Trophy is just sitting on the table by itself, like a shitty plastic table, and it's just and no one's even looking at it, and I'm just like, why is the Heisman Trophy just sitting at the table and nobody cares? Like, what is? And then, so as it turns out, so it's across the street from Radio City. The Heisman Trophy Award was going to be like the next night or something like that. So they were doing a segment about it. So it's just me and the Heisman Trophy hanging out. No big deal.
Can I ask a question about that?
Sure.
Does every winner get a trophy of their own, or is there only one trophy?
I think there's multiple trophies. I think the school gets one. I think the guy gets one.
Okay.
I think there's a third.
Okay.
Yeah.
Cool.
I think there might be three.
There's not a Family Cup.
There's definitely two.
Right.
At least two. One for the school and one for him.
Got it. Okay.
That's cool. And then here's a great one. This was the day I met Brian Shannon. It's 13 years ago. JV, Pearl Dog.
Earl.
How about that for old school, huh?
Wow, look at Josh. Wow, that is a great pick. I love it.
13 years ago. Here's another great one. This was in Chicago. This is when Sean still lived in Chicago. That's Sean. Shout out Shawnee, baby.
Shawnee with the hair.
Yup. Jeff Carter on the right with no hair. I don't think Jeff Carter ever had any hair. And And Eli Racky, shout out Eli Racky. Eli Racky is the reason that I am a sommelier, because him and I were talking wine. He's actually a certified som also. And he convinced me that I could pass level 1 of the som without studying. And I listened to him and he was right. And then, so that was the beginning of my formal education in wine. Shout out Eli Racky. Look at Sean. How about that? Look at that. Isn't that funny? So I found that. I thought that was good. And then for those of you who think I'm a fair weather Dolphins fan,
one more.
why don't you come on?
Oh,
Since day one.
You got to have that
one.
framed.
I earned this.
That's great.
Is that framed at Abuela's?
I don't know where that is.
It's-
is it framed at Abuela's? Oh, I don't
It's
know.
should be.
That's a good shot, though. Look at that. Who's the OG Dolphins fan here? Come on now. I've been suffering a long time. I earned this.
You
earned
did.
this.
No one said he didn't. No one said he didn't.
So I am a fair weather Dolphins fan for the next, 2 months here? Very excited.
Yeah, but you're kind of like a Miami guy now. Like you root for the Hurricanes. You know, like you're in. Like it's kind of like Rangers. Yeah. I root for the Rangers. I'm Cuban. Cubans don't know anything about hockey.
Yeah,
I root for the Rangers. That's the only New York team that I actually like. Like I don't dislike the Yankees, but I don't give a shit whether they win or lose. I just like going to games. But I actually legit root for the Rangers. How about that?
The Dolphins are my Rangers. I get it. I would love to go to a playoff game. So go Fins.
Speaking of bandwagons, the Lions are my Rangers, and as well. I living in Detroit or Michigan for 7 years, I grew very fond of the Lions. So I'm all about the bandwagon. I'm all aboard the bandwagon. Let's go.
The Lions for a long time are like a pug. Like they're so ugly, it's kind of cute, you know?
Yeah.
Dude,
right.
There's something to love about a lovable loser, right? And hey, they're winning now.
So it's been 30 years. You got to go back to like one of these Barry Sanders seasons for last time they won the division, and they were still terrible. Had like Herman Moore as a receiver.
They haven't won a playoff game since in my lifetime, like literally in my entire life, they haven't won.
Barry Sanders. I was very young, but he was my favorite player to watch as a kid.
Go watch on YouTube Barry Sanders highlights from when he was at Oklahoma State.
Yeah,
absurd. We're getting requests for more little JC picks. I got one more for you.
One more. All right.
Throw up there. There you go. That's a good one. Look at that. Look at that game face. Look at that game face. Ready to go, baby. There you go, Rachel. About that.
It looks like you.
Does it?
It does.
Well, there's probably a good reason for that.
There we go. That's cool. All right.
I want to give a quick shout out to our friend Jason Purz. I see him in the chat right now. Against All Odds is the YouTube channel. He does some awesome stuff. He interviews great guests. I was lucky enough to be one of them. We talked all about 2023 markets and then our outlooks looking ahead into 2024. It was a lot of fun. I think it's up on YouTube now. Maybe somebody could drop the link in the chat, but go check that out. Awesome work, Jason. Always a good time.
And my recess is the Iron Claw. Definitely good movie. Go see it if you get the chance. If you're into whether you're into sports movies or not. It's not even really a sports movie, but I would say 8 out of 10. The less you know going in, the better. I knew like the bare minimum. But if you know nothing, that's great. If you don't know anything about the story at all, that'd be preferred, I think. But even if you do know it, it's a great Zac Efron is really good, like beyond jacked. Like there's jacked, and then there's where he was. I'm insanity.
Matthew says it was depressing.
It is not a feel-good movie. If you want a feel-good movie, do not go see The Iron Claw. It will not make you happy. But that being said, it was a tremendous film. Enjoyed it very much. 8 out of 10. Maybe Efron gets some award play out of it because he was really, really good.
All right. So Spencer coming in and depressing everybody just for the end of the show again.
That's what I do.
And
my other recess is a Christmas miracle. My Thinkorswim is working again. I don't know how, but it is.
Spencer can participate in the short squeezes this
I'm
week.
back, baby. Let's go.
I just like that during Santa Claus rally, I get to I get to put the memes with Santa Claus like dancing, you know?
Yeah.
Like I like those, you know.
It's meme season.
It's
Meme
meme
away.
season. I like it.
All right.
I like it.
It's Tuesday, which means we got shot request. Oh wait, Strazza, you can't do CRL, but I'll fill in for you.
Sorry.
All right, that's okay. Maybe JC will stop by. So CRL, same time, same place, 1 o'clock, right here on the channel. Strazza, are we doing spaces or what?
Hell yeah, we're doing spaces. And then I'm going to get on the road after that. And I'm very excited. If you're ever driving down through the Keys, stop at Robert is Here Farmers Market right before like the 12-mile stretch in Largo. It's right there in Homestead. The best farmers market you'll ever go to. It's amazing.
Right.
I can't wait.
No.
Wow.
Yes,
Best
spaces.
farmers market.
Best farmers market ever. Really, really good. So fun. They got like petting zoos. They got all the birds, like everything. It's a huge, it's like a compound.
All right. How
Good
about
stuff.
that?
We'll
Fun
see you
fact.
there. Thanks to our guest today, Ryan Dietrich. Thanks to all of you in the chat. Smash that like, hit the thumbs up, please, and thank you. Have a good day. Go make some money. We'll see you later.
Adios.
Run it. I can't take no loss. I don't even know what it costs.